Hey guys, welcome back. Let's dive in right quick on this new video on an update about what's happening on the S&P. Most of so far, we're holding pretty good. Why did I say that? So since actually the follow through day, which is right on this day on the 21st, or you can call it even the 18th. Well, so far statistically, people who came out, that William O'Neill who came out with the follow through day, that basically they said that the longer we hold above, so the longer we hold, what I mean by that is it's price action. So the longer we hold and we don't break below the low of these follow through days, so the longer we hold above, which actually we did hold, the more successful that we're going to be in an uptrend. So basically, so that means we're doing so far so good. Most of these indexes are doing good. The Dow Jones actually is the only one that's breaking and holding above the 200 moving average. You can tell from these trend down here, which is actually basically following. If you see my downtrend here, this white line, it was actually basically following that 200 moving average, which is that brown line. So actually, we've been getting rejected here and here a couple times here, and then so far, for the last couple of weeks, we actually just pulled back a little bit, and I was really watching it right on that low here, especially after we bounced back. I said if we come down, especially after this day, I said if we started to break below that, that's not gonna be a good thing for the market. So actually we did hold, and then we bounced right back, and then so far so good. So I'm overall positive on the market, unless if something happened, and we'll see what's gonna happen on the next CPI on the 13th of next month. The market expected the Fed to raise interest rate by only 0.5 point, not 0.75, not too aggressive. So we have volume also, you can see down here. So we've been going up on a good volume. So like I said, overall it's pretty good. Dow Jones is the only one that it's breaking and holding above the 200 moving average. And if I go to the weekly, so we're breaking and closing on a good volume though. You see it right here. Closing above the 50-week moving average, which is the 200 moving average line. Every time we close above it, statistically, if you look back in the chart, we've been doing pretty good. We're taking day by day, nothing. I mean, I like so far, like I'm telling you right now, we're holding above the 200 moving average, and next day I'm not saying it's gonna happen in one day, but I'm always open to anything in the market. It doesn't mean that so far it's all green and rainbow, but I'm always open to anything that's going to happen in the market. Other indexes are starting to close above the 50 moving averages, which is always a good sign. And that's it. So I'm overall positive on the market. So I'm still looking for trades. I'm going to share with you a couple of things that I've done, and I'm going to share with you how I manage them, which is actually one of the things that a lot of people struggle with. I think from my point of view, and I've struggled with it too, because you can tell me that we're actually on. You can tell me that actually I've been watching the stock and it's trending on a range, and then all of a sudden it just broke out. Yeah, you buy it right there. But the thing is, how are you going to manage it up today? So that's what I'm going to be sharing with you today, how I manage a trade. But like I said, don't take this for granted. Like you don't have to copy me. Just take whatever it's good for you and then implement it to your day trading or swing trading. Like I said, my time frame is swing trading. I'm not a day trader. I can day trade sometimes, but most of the time I'm gonna follow the trend. I'm a swing trader. I'm not a position trader. I'm not an investor. Okay, so let's bounce right to those trades that I found, and I'm gonna share with you how I manage them. The main one actually, and I did mention this last week, it is actually I think it's JBL. So what happened with this trade? You can see my break-even point here. That was actually, I opened the option for it, and I closed the option above 50% win. I think it was like 60 or 65 or 70% win rate, something like that. So I did close it. So how did I manage this trade? So like I said, I've seen this before, and I discussed with you that I've seen a reverse a head and shoulder. You can see it right here. So I go to the weekly, and that's why I always urge you guys to go on the weekly and look at charts on the weekly, so you can see, so you can cancel all the noise. You can see the head here, right shoulder, left shoulder, and it was starting to break out here. So what happened as soon as I bought it, when I bought it right at the break, the stock held pretty good, and this is when I started noticing that the stock was acting weak right on this day here. Okay, so I didn't do anything with that day. Okay, second day when it's starting to close above it, which is not a good thing. Okay, so the first thing I did, I put my stop loss right below that day. Okay, and then I was thinking, that's it. Like if it's a losing trade, I'm gonna lose between 3 to 5%, and I'm gonna be out. Second day after that, it didn't hit my stop loss right on this day, and it jumped right back up. So the market was a little bit volatile. And then as soon as it closed back here, and I'm assuming this is last week when I said I'm mostly positive that's my stop loss is gonna get hit. So what I did, I looked at which one was lower than this. So this was like 61.64, and this one was 61.69. So I took the lowest low, which is this day, and I kept my low right below that, a couple cents right below it. And then I was like 90%, 99% that my stop loss is gonna get hit. I didn't anticipate anything. I mean, anticipated that my stop loss is gonna get hit, but I didn't predict. I didn't say let me just get out of it. And because if I had got out, I would have taken out a loss, which actually turned out to be a gain. So I didn't predict anything, even though I was like 99% sure that my stop loss is gonna get hit, especially since we closed here and then we closed here. And I was more sure that since we came back up above that 8 exponential moving average, and then again closed right below it, and I went through the 21 moving average, and then we didn't close below it. So like I said, you have rules, but the most important thing is you want to stick to those rules. So that's exactly what I did. So I put my stop loss right below so I found out which was the low, and I found this low actually was lower than this low. And then next day we didn't get hit. My stop loss didn't get hit, so I had good to cancel order, stop order, and here I was really sure that I was like, okay, this is it. This is my stop is gonna get hit, especially when we close below the low of that 21 moving average. And guess what? I just skipped my loss. You just trade it. It's a psychology thing. You don't assume anything, because the market can fake you out and do all that kind of stuff. That's why you have rules, black and white. You get hit, you get out. That's simple. You don't want to be talking to yourself, because that second person you had, that's gonna mess you up. So what I did next day, the market just went up and it proved me wrong. So I had my stop loss to protect me, and then it proved me wrong. I'm like, okay, and then even we did it, we went up by like with volume right in here. So I didn't do anything in here. I was watching my options go into the green side because I was in the money. I had like 65. I bought if you're thinking what I'm doing with options, I don't buy options. I sell options, which is the right thing to do in my opinion. So I sold vertical spread. I had 65, so I sold put 65 and I buy 60 for protection. And then next thing here, this is what I took my profit. And still, so far, I'm still holding my long stock position. So that's exactly how I treat it. And this is really difficult, especially if you don't have set of rules and you don't know what's happening. Should I exit? Should I stay? So that was really a good example that I really wanted to share with you. Looking at the stock on the weekly, I mean, this is really, you couldn't get kicked out, but you can buy it right back in. But hey, I told you, I have rules. I have moving average that it helps me go through those times, and it worked out. Even AAHR, I had this position when I bought it right in here. I took 50% off, and I think the stock had, I got in here and I took some profit out, and then I don't remember I think I took the whole position out here because I think the stock had gonna go through earnings, so I just do one, and the stock market was really volatile. But even if let's say I took some of it off when I had like 23% or so, I would have taken it out. And then, so I had two choices if I had the second half still in. What I would do is, the stock came to the exponential moving average, it bounced right back, it bounced right back up. So what I would have done, I would say, okay, if the stock comes back down here, I would exit, take my break-even price, and get out. Or watch it. The second thing I would do, I would watch it, even though I usually wait until the close, see what the stock did. And usually, and I said this before, if let's say we are on this day, I would take and put my stop loss of the whole position. But if you did this, you're gonna eat some of that profit on that first half, because my entry point was 1850, and then this day is 1784. So you would have taken some profit out of that first half. So, but again, it's up to you. What do you want to do? Either you take half and then as soon as it's starting to break below that candle here or here, you exit. So you would have been exit this day. So that's scenario number one. Or you can wait until the stock comes back, you see what happened after the closing date, and I would put my low below here. Usually I put it 15, 20 cents, and I think with that 20 cents rule, 15 cents rule, I wouldn't get hit. I'd still be holding the stock through here. So that's what I would do. That's another scenario. Another stock that I had before, and I closed it way before. I don't exactly remember why I closed it, but I think it was due to earning, maybe. Yeah, you can. I think that's why. So I had the stock. I think I got in right in here or here. I don't remember exactly what day is it. So what I would have done, because of this candle, a lot of stocks really was acting up like really badly on the Friday, this Black Friday. So what I would have done here, even though we moved up here, and I said this one of my videos, I said that I take profit between 10 and 20%, but the move from here to here, that's only like, I mean, before 10 and 20%. But again, I said, look at the stock, analyze it, see why did I put this white line up here. So if I move it, you'll see that there is a gap in here. You see that? There is a gap. So what I always say, and this is just me again, you take whatever you like in these videos, and you go from there. So put in the chart on the weekly. Most of the time, what I would do, since we had a previous resistance in here, so I know the stock is going to come up here and we're going to have some resistance. So what I will usually do, regardless of what percentage I got in and got out, because I could get in here way early, which I usually buy at the close. You want to take some profit right when it comes over here, and that's, I mean, if you would have done that, you would have taken the first half, and you would cash in like first half like 5 or 6%, and then when the stock comes back below here, what I would do, either close the position, because like I said, if their stock is acting good, it wants to push higher, it wouldn't have done this. That's my perspective, and that's how we protected my because at the end of the day, it doesn't matter if the stock is going to roll back up and go back up, I'll buy it back in. But all I know, I want to protect my capital as soon as possible. So I see this, even though let's say the stock is going to go 100% from here, but I still don't know the future. Nobody knows what's going to happen. So all I know is just the market and this stock gave me this red candle. How are you going to deal with it? That's the real deal. That's what you want to that's how you want to analyze your chart. Because at the end of the day, you know, you lost. We've been in the same trade. No, I lost 3%, but you lost 8%. This is how much you lost. You know what I'm saying? So what I would have do, I would take some of this half off, and as soon as the stock, either I close that position, the second half, or put a stop loss right below the lower, because we can always, like I said, we can always go up, but until then we don't know that for sure. It's not like a predicted future thing. That's if you do that, you're gonna lose your short. Okay, moving on to the next thing. RS. I had this stock and I got in right at the breakout here. I liked it, and then I just did not like how we closed way on a higher volume. Look at that. Look at that candle. I didn't cash in any profit actually, because we moved up here and it was barely like 6%. Even though we had some resistance in here, but I didn't take any profit. But so I closed this position with like 2% loss or something like that. So that's how I end up this trade. I'm still watching it. I'm not gonna let it go off my radar. It's on the weekly. It's still acting good, you know, and I'm just watching it. And as soon as it's starting to go above another area of resistance, which is over there, I'm gonna jump back in and I'm gonna buy it. So I got out of that position. And another one that I got out of it is all these that I'm showing you. They are like small loss to me. So like 2 to 3% loss. I got in right at the breakout. The stock was acting good, and next thing you know, I mean, it barely like right closed. The close of the 21 moving average is 64.92, and the stock close is 64.77. So it did close below it on a higher volume. And believe me, there's a lot of stock that did this. I have no idea why they did this, but all I know is just I'm controlling my risk. I don't care about what the reason is, and that's exactly how you want to think about it. You don't worry about the reason why. I don't care. All I'm worrying about, stock is acting up. It did close. It did something that is not supposed to do, because if it's a good stock, put it this simple. If a stock is good and wants to continue higher, it wouldn't put in this candle. It would just go like a small candle like this. If it's acting bad, it would have put this candle. That means it's lower price ahead. If it goes up, by all means, I'm gonna take my 3% loss. If it goes up, I'm gonna buy it right back in. So that's how simple. You don't want to complicate it. Then I came out with so many rules before in the past, and I started getting into this like loopholes and circling around because you can have like good strikes because your strategy is not going to work in all market. All you want to know, what do you want is you want to risk as minimum as possible, and when you win, you want to win higher than the previous losses. That is it. I don't care how you do it, but that's how you should do it. Because all the pros and people who make money and still make money, that's how they do it. When they lose small. When they win big. And that's the holy grail. And it took me years to figure it out, but it was simple and plain. So that's how I try to keep my trades as simple as possible. This is CGVA. Another one, it was SAI. I got in here, it was a gap, it was a lot of volume, and I was holding it. I didn't take any profit, and next thing you know, boom, it gapped down. I took like 2 to 3% loss, and I got out. If its stock was good, it shouldn't have done this. Why it did gapped? I don't care why it did gapped. All I know, like, this shouldn't happen in a good stock. If stock is acting good, it shouldn't happen. Excuse me. Looking at the stock on the weekly, look at that. If stock was acting good, I mean, it should just go like sideways, just consolidate these gains, but it didn't do that. It just take all those gains out. What's happening? I don't care. So it just basically somebody he knows something, or she knows whatever, like a bunch of hedge funds, whatever. They don't like the stock, even though stock looks really good on the weekly, you know. But guess what? I mean, it still can go up. You know what I'm saying? It can go up, but we don't know. All I know is I have to manage whatever is in front of me. I have 1 + 1 is 2. That's all I'm seeing right now. Stock shouldn't do this. It came down. It's like, basically, look at it. It's like another analogy. You hire somebody to do a job. They don't do the job. You just kick them out by period. You call for somebody else. That's exactly how I think about it. Stock. I bought the stock because I anticipated, based on probability, that's going to go higher. It didn't go higher. It violates one of my selling rules, and I'm out. That's it. Period. And the stock, you can see on the side, the left side, it did had actually good earnings, and it had a good last quarter. Last quarter was like, it was decent, 27%, but revenue growth rate was like 290%, which is really triple-digit number. That's usually what I pay attention to. It didn't do that. I don't care what it does. All I know, I'm gonna have to say it over and over until it sinks into your head. Another stock, moving on. I think those are all the stocks that I want to discuss with you. Couple ideas that I come across were GFS. I thought like the action here. I think I'm supposed to get into the stock right on this day, and I like the volume here. I didn't. I think I was doing something and I missed it. I think it's still doable here, even though like I have to reduce my shares because it did move a little bit higher than I anticipated. I like the stock, looking at it on the weekly, and look at that. You can see that stock moved up and just went sideways basically here, almost like flagging. Look at that volume coming in. Revenue growth rate last quarter it's 35%. It's decent. It's not triple digit, but hey, it's good. So I liked it in here. Moving on, again, I put this white line right up here. Look at it. We had previous resistance. So let's say I bought it here and the stock moves up here. Guess what? I'm gonna take some profit because it did move already 18%. So regardless, so let's say that this white line was like lower here. I'm gonna take that percent regardless. Even if it's 2%, I'm gonna take some out. That's how I trade. And I just want you to take whatever it's good from this video and just apply it, because all I want you to do, reduce your losses, respect it. 3 to 5%. Some people put 7%. My risk is between 5 and 6%, and then I reduce my shares, my position size depends on where am I going to put my stop loss. Keep it simple. If you don't know what you put your stop loss, just use one of the moving averages. Most of the time, I would not put my stop loss below the 8 exponential moving average, because like I said, most of the time, good traders that I've seen and I've come across, they usually look at the 21 moving average. So it's already calculated for you on on a daily basis. You look at that, and you can put your stop loss right below. So let's say, for example, this day is like, what is it? Looking on the left hand side, the stock closed on 64.77, and it's calculated on the 21 moving average. It's 57. So 57. If I bring my calculator here, so let's say we got into this day here, which is, let's say you bought it at 64. 64.77, and move this moving average. I'm talking about the 21, the green line. It's 57.26. So it's 57. But let's say 0.20. That's 11%. So let's say you put, I don't know, like $1,000 in every single trade. You do the math and you reduce your shares because it's 11%. Let's say you're gonna reduce. Let's say I'll bring it over here. Let's say you see it right in here. So let's say you have $1,000. Let's say you trade $1,000. Let's say 10 shares. Let's say 15. All right, 16. So that's $1,000. Okay, that's $1,000. But like I said, I want to put my stop loss at 57, but I want to risk less. So what you're gonna do, you're gonna reduce your position. All right, so we're gonna bring this back. So the stop loss basically 5% of $1,000 is gonna be $50. So you want to risk $50 here instead of 121. So you bring this down to 8 or 7, and you keep doing that. And then now your new share is going to be 7 instead of the previous one. So that's how I usually do it, and that's how you're supposed to do it. You do whatever you want. I'm just showing you what I do. Okay. What else? GFS. Another stock that I recently bought is ELB. I like this one. The revenue growth on this one is 68%. I really like it. Put the stock on the weekly. You can see the stocks had a base here and it broke out here. See, look at how stocks usually move. They go up and they consolidate. They go up and they consolidate. See, this is consolidation here, and that's how the stocks move. They don't go straight forward. So just keep that in mind. And then the stock move. Now we're having a long base instead of just this small bases here. From here to here, that's about what? That's about 11, almost 1 year, so 11.7 months. And you can see the stock starting this candle here. Look how big it is. We never close below it. All right, that's digesting all of it here. And somebody starting to buy the stock and didn't want it to come down. So and that actually what creates higher lows. You can see it. And then at the end, we came back to this previous high, which is here. And then hit back here, a little bit of pullback, and then somebody started buying it right in here. That's your buying point. So I got in as soon as it break out right in there. So far so good. If it acts down, starting to close below the 21, I'm gonna put a stop loss below it and move on and keep going. That's how it is. You keep hitting it. So if I get a loss 5% or 3%, not a loss 5-3%, not a loss 5-3%, you can have 4 to 5 strikes. But once I'm gonna win in one stock. I'm gonna win 21%. I mean 20%. So minus the 15%, that's how I still made money. So you need to have the discipline to get out as soon as it hits your 5% loss. And that's what I struggled with before, and that's why that's why I came out with this channel, and I want to share with you my experiences, what I did wrong, and I just don't want you to lose money. That's basically what it is. ELB, some of the good stocks that I got into and they really act really bad. I got this back in right up, so I got in right at the pullback. So the stock had a reversal candle and I did not like it. So I'm putting stop loss not right below it because we just closed below the 8 moving average, exponential moving. But I'm watching how the stock is gonna do right below that 21 moving average, even though I do not like that action at all. But looking at it again on the weekly, stock still needs to digest those gains. We went straight 3 weeks, so a little bit of sideways here, that's not going to hurt it, okay? And we had a long base, so just keep that in mind. Always look at the stock in different time frames. It's going to show you what's happening. So the stock really can come down, close below the 21. It's going to kick me out, and it's going to digest going sideways and just go up. That's the nature of how some stocks do. Again, another one. What else I want to share with you? As a new stock that I found, it's called Wire. And then if you find any stock, you just please let me know in the comment, and let's see and just discuss them. And then I'll try to make a video right as soon as you post them, and then we'll see if it's a good stock. But if you put stocks, make sure you don't put independent stocks that is above minimum $15, and make sure the stocks had a volume average of 200,000 shares per day. So those are the stock that I'm usually like to trade, and have decent earnings, like this one, Wire, 17%. You can see some triple digits on the APS, and the stock had how much was it? Yeah, it was 31% on revenue growth rate on the last 4 quarters, which is decent, not great. I know some stocks that do a really better job in this, but we had a long base here and we had a higher lows in here. See here, here, here. So somebody started buying this stock, put in the stock, canceling the noise. Look at the stock. We had a long base here, down here. Stock broke out here, you follow it, you make some money, move 21%, you take some out, you leave the rest, you follow higher lows, and then you exit right in here. So buying from here to here, that's 86%. How simple is that? And that's basically my strategy. That's how I follow the stock. That's simple. It needs a lot of discipline. It's easy than done, but hey, you gotta. That's why it takes time for you to develop this skills and discipline and patience. Long base, you can see how many times the stock hit that resistance line right in here. You can see that, and you recently was starting to break out. And then I like the stock, and then it was decent volume, not a lot, but it was a lot of volume in here. Put the stock on the weekly and you will see this higher volume bar, and that's what you want to see. You want to see higher lows. So the stock's really acting really good. All right, so that's what I really want to share with you. As far as crypto, I had a position, and I told you that long ago on Ethereum. It was a small position, not a lot, but I got out. I got out on the right time. How is that? So basically, so the stock had a base here. You can see it right in here. And the stock bounced down. I remember right on this time I said that the stock, that crypto is going to go up, because basically it was following what the stock market was doing. And then as soon as they put that day here, it was right on this green candle, which is this day. That's when I got in. I bought it right that day, and I was basically watching it, and I said as soon as this, so basically we did a higher low. You can see it, the stock went up here, came down, put a new low, so it was barely using that 21, which is the green line, the 21 moving average, and we went right back up. So my stop loss was right the low, starting to close below that, I'm out. So putting the chart on, this is the daily, so putting the chart on the 4 hour, you can see it as soon as we put a low here and put a low here, and we bounced right back up with volume. So basically my stop loss was right here. So let me show you exactly where my stop loss was. It was right here, and as soon as we came back down here, and that's what I got out. I had a small loss in here, so right there. So that's when I got out. I didn't shorted it, but that's I don't have any margin account on spot when it comes to crypto, but that's when I got out. And then you can see that's exactly what it. Every time like you look at it, as soon as the price action accelerated, that's when you know if you're right. Like that's when the time when that's the right time to get in or to get out. Usually when most of the time, this is an 80 to 20% rule. Most of the time when the stock just break out of a consolidation, usually as soon as it break out, you can see the stock just rallied right from there. That's when you know like that's the right time when you buy it. That's just me. Again, I got out here, had small loss, got out. What I'm thinking about it right now, again, you know me, we moved right back up higher, regardless of what's happening with the FTX broker and all that. That's just the reason, you know. Nothing happened fundamentally on crypto side. Nothing happened. But again, hey, this is what's in front of you. You gotta trade this, not the future. Crypto can hit $1 million. I don't care. But until then, all I'm trading is whatever is in front of me. If I give you an equation, you give me a different answer. You're like, oh, this is the answer of that equation. What I'm giving you this equation. I'm not giving you any other equation. So that's basically how you should look at it. I'm giving you this equation. What are you gonna do about it? All right, the stop hit your stop loss. What are you gonna do? You're gonna wait and watch it? You know, no. It's just because if you lose your money, you're out of the game. So, and if there is a new bull market comes in and there's new opportunities and you have no money, so you're out. You can't make any money. So that's how you should think about it. I'm looking at it right now on the 4 hour chart. All I'm watching the low of that candle, and then if we starting to close below it, it's not gonna be good. So we're gonna be continuing lower. Which, as far as I'm right now, what I'm looking at, it's not looking good, because we can digest. Most of the time, we'll digest right on the top of this green candle, so we'll go sideways like that. But since we pull this candle, watch this. This candle here, this red one right in here, as soon as we did it, all these price action, let me show you. So it's all these price action, it's actually inside that red candle, all of it, from here to here. All of it's inside this red candle. So I'm looking at that as a negative consolidation, even though everything else is still above inside this green candle. All right. So far it's still good, but if we need to bounce, we need not to close below. We need to bounce and go up. That's on the positive side. On the negative side, we continue to consolidate. So if we keep going down here and then consolidate here, that's most likely, I don't know what's going to happen, but most likely it's going to end up breaking below here, and then we're going to move on to this candle. And look how this candle, again, this green one here, it was inside here, but this candle took out that green candle. That's deep analysis, and that's a price action. It takes time to get into these analysis. All right, I hope you find any value with this video. I didn't talk too much, even though, like, when it comes to stocks, I mean, you have to explain it, and unfortunately it takes quite a bit of time to explain it. I just don't want to show you my trades and brag about it and tell you I got in here, I took profit here, but I just want to get down to you and show you exactly what I did and what was my thinking process of doing it. So I hope really you find some value in here. If you did, subscribe, support the channel, help me grow the channel, so spread the word. If you know anybody who's struggling how to manage trade, just please refer them to the channel so they can learn. And this is it. I hope you see you next time. If you want me to include any chart or talk about any chart, just put in a comment below, and I'll do my best to talk about it. All right. See you soon next time. Bye.